Clive wanted us to look at Jubilee. Now, Jubilee is a share that we can see clearly has been caught within this consolidation band since about February 2018. And every time it reached this upper band, waiting there around 52 cents, it finds resistance. And ever since then has just been flirting and consolidating in this band. However, it is at a critical level at the moment, which is that 40-week moving average on a weekly graph. And that is waiting at 45 cents. So as long as the share consolidates above that 45 cents, we will remain fairly optimistic about the share. Below it, negativity. And we can see for the last 2 weeks, we can see that the investors has protected this share for higher levels. But the big consolidate or the big resistance that needs to overcome is waiting there at 52 cents. If the share can change that into a support, we can assume that it can reach for higher levels. What is a bit of a concern is the fact that this is a spinning candle, and that tells me indecision. And yes, I know this is a weekly graph, and we're still sitting on in the middle of the week, so there's still one trading day left. But that spinning candle tells me that the investors are unsure whether they need to take the share price to higher levels or lower levels. And that indecision is normally not a good sign. So, Clive, if you want to maybe nibble on it around current levels, make sure your position size is not too big. Stop loss you can use is unfortunately a big one there at around 40 cents. But keep your eye on that 40-week moving average on a weekly graph. Above it, positive. Below it, a little bit uncertain. Jonathan wanted us to look at the platinum price. And very interesting enough, the platinum price, as we said last week, confirmed that descending channel. And we can see on that red line, it found beautiful support this week, but it needs to remain above it. The platinum price needs to remain above that 40-week moving average that is waiting at $823 for us to remain optimistic. Interesting enough, that 40-week moving average is very close to that upper band of the descending channel, and it needs to remain above that for us to remain positive. However, interesting enough, we can maybe even find that when the platinum price starts to consolidate below this level again and start to retrace, this might have been a false break or a whipsaw, and basically just sucked investors in just to spit them out. So it needs to remain above this trend line, or remain at least above that 40-week moving average for the optimism about this descending channel to remain in place. Interesting is definitely also an instrument we will keep on our radar is the platinum price to see if this descending channel has given us a false break here or if it will continue for higher levels. And interesting enough, for any new viewers maybe, the length or the target of the descending channel is normally the width of the channel projected upwards from the level that it was confirmed. So it was confirmed around $820. So this platinum price can go to $978 over time. Remember, an instrument doesn't just bounce in one move. It nibbles and comes back a little bit and goes up again. So it breathes and lives and reaches for higher levels. But that is the target for a possible price on the platinum price. Laura wanted us to look at GoPro. And I like this graph, and I've mentioned last week as well that it has been fighting this 40-week moving average and this trend line that waited there around $5.79 for a while now. And again, also caught within more falling wedge here. And when do we call it a falling wedge, and when do we call it a descending channel? When the mouth of the channel or the formation is more narrow than the tail, it is a wedge. But when the length of the formation is almost the same at the tail than it is at the mouth, we call it a channel. So interesting enough, I would rather call this a wedge, a falling wedge, than a channel, because my tail here at the back is a little bit wider than it is here at the mouth. But both of them are positive formations. And the instrument or this share GoPro has to remain above that 40-week moving average and above this upper band of the wedge for us to remain optimistic. Next strong resistance that needs to be overcome is waiting there at $7.21. Unfortunately, on the stochastic indicator, it is overbought, which means the probability of the share to reach for lower levels is more likely. So, Laura, I think you must maybe just wait for it a little bit. keep an eye on that 40-week moving average, but use this upper band maybe as a stop loss if you want to protect capital there around $5.38. But I still believe this graph looks strong, and I'm fairly optimistic about it. Another share that we want to look at there that John asked us again was Amazon. And I assume that John might have a position on Amazon because he wanted us to look at it last week as well. And we've spoken about this head and shoulder formation. And let's see if my crayon will allow me to draw that in again. Yes, beautiful head and shoulder, found resistance, support on that neckline, resistance against a little bit of support. And it's now playing with a possible double top. And that double top formation will only be confirmed when this neckline, when this level here, waiting at the $1,588 changes into a resistance. So a double top is when a share price reached for higher levels, found resistance, retraced, almost found support at the same level where the previous support has broken upwards, found resistance again, retraced, and when the share changes this same level that it found support there in the middle, there around the 4th of February, found resistance there again, we will say that it is a double top. And a double top formation is a negative formation. And this 40-week moving average, which is represented by the red line, has been tested just below it and retraced. This share could not find more buyers to reach it and change that 40-week moving average, waiting at $1,725 into a support, and that is seen as negative. So John, Amazon, we're still fairly pessimistic about this share. It is toppish on the stochastic indicator, but more importantly, this is a negative candle, and this double top tell me that there might be selling pressure despite the small move to the upside. However, the negativity will be wiped off the table when that 40-week moving average waiting at $1,725 changes into a support again. So still fairly pessimistic about Amazon. We might see lower levels, but keep an eye on that 40-week moving average. Peter wanted us to look at Facebook. Now, Facebook has clearly changed that 40-week moving average into a support. And it's started to trade above it, but it's almost very close to levels around $1,172. And above those levels, we can assume that the share price can even reach for higher levels. The fact that that 40-week moving average changed into a support is seen as positive. However, if the share cannot continue the uptrend and finds resistance again, we might even have a possible double top here, because my indicator on the stochastic is heavily overbought, which tells me that the probability of a pullback is more likely. Now, the stochastic indicator just highlights that the rate at which the share price escalated is running out of steam. So when it is overbought, it tells me that, hey, this share price is not reaching for higher levels at the same rate that it has been in the last 14 days or 14 weeks. This is a weekly graph. So that's stochastic indicator, and you'll know we always mention that. And you can even, there's many indicators that you can use to identify overbought or oversold levels. Our favorite is just the stochastic. I want to look at the DAX, and the reason being is this index, and the DAX is the index for the German investors, and the DAX is caught within this descending channel. And interesting enough, look how closely that 40-week moving average is to that upper line of the descending channel. And that's one of the reasons why I absolutely love technical analysis, is the reason is how different indicators or moving averages or candles can highlight support and resistance. And support and resistance is nothing other than a level on the graph, a price level that tells you investors were keen to take this price to higher levels, or they felt this is too high, we are going to start to take profits. And if I talk about investors, I'm with all due respect not talking about you and me, but the informed capital out there, the foreign investors, the big money that can move an instrument, especially an index. So we can see that the DAX index is approaching this upper band of the descending channel again. And this will be the big test. This will be the test to see, hey, can the index change this level around 11,741 into a support? And if it can, we can easily see the DAX reach for higher levels. But if it can't and retraces again, we can see lower levels on the DAX. And we can see that previously, this upper band has been a strong resistance. So the buyers need to bulk their muscles and find more buyers to take this index here at higher levels there around 11,740. Nautilus is a share that we also looked at last week, and we want to maybe just highlight it again because, I mean, this possible higher low that we spoke about was tested, found resistance, there was not enough buyers, and the sellers came in and they took the share price to lower levels. And sometimes we will see that when a positive formation, you're almost certain that this positive formation must take the share price to higher levels. And I've mentioned this earlier this week to one of our subscribers, and I said, sometimes the worst thing we can do as investors or traders even is say a share must do this or a share must do that. Trust me, the share doesn't have to do anything. The market is always right. The share price is always right. And if you are caught on the wrong side, sorry, my friend, you are the wrong one. That is why position size is so crucial. And that is why risk management is so crucial when investing or trading on the stock market. And interesting enough, when the share changed this level that weighted at $7.91 into a support, a lot of investors would have said, this is fantastic. I mean, this share just has to go up because, I mean, it's coming from around $16. It just has to go up. And guess what? It didn't. It found resistance and it retraced again. So a lot of traders or investors that might have bought this share and overexposed themselves are now crying in their hands and think they never want to invest or trade again on the stock market because, oh my goodness, look how this share just retraced, and maybe even thought that technical analysis is not for them. Trust me, make your position size small enough. Do apply risk management tools and skills to make sure that when a share price does that, you will not be crying in your hands and you would not be completely depleted. If your position size is small enough, you can even maybe timber this share price into holding into a profit again. If it retraces even further, let's say it goes back to $2. And there's maybe a tweezer bottom or a triple bottom or two moving averages that cross. You can add to your position there to better your average price and maybe turn it around. Or if you have taken your stop loss there at $7.27, you have taken your stop loss and you wait again for a positive indication that the buyers are coming in and that they find value again, and then you can accumulate and add to the share. Please feel free to send us any emails if you've got questions. Have a fabulous week. Cheers.